Hello and welcome to a very, very important episode of Be the Boss of Your Money. Today, stocks had their biggest plunge since March. Dow Jones Industrial Average down almost 7%, S&P down almost 6%, small caps down close to 8%. Today was one heck of a day, which also adds to the last few down days that we've had yesterday and the day before. So this is a pretty significant drop off. We're going to get into it. If you're new here, my name is Mitch Goldberg. I'm a financial advisor with the wealth management firm Client First Strategy. Is the little bull market that we had over already? Are we about to test the old low for March 23rd? That's what we're going to talk about because we need a strategy. Let's let the intro roll. Okay, thank you for joining me. We are live. I'm Mitch Goldberg. You're watching Be the Boss of Your Money because I want you to be the boss of your money, not your money to be the boss of you. It's very easy for that to happen. We've got a pretty packed episode today. I'm going to move through this. We're also having a very special guest, a friend of mine. A lot of people who know me know this person. Also, he's John Robertson, owner of a business called The Sexy Salad, corporate catering, lunches, deli. I'm butchering what he does. No pun intended when I say butcher. But he is an awesome person to speak with. He is part of the Goldman Sachs 10,000 businesses. They had a big meeting today. He met with a number of New York State politicians. So I'm going to bring him in about 15 minutes. I want to hear what he has to say. And you couldn't ask for John at a better day, at a better time, because all of a sudden we thought everything was going okay in the economy. Things are opening up. And here we go again. Stocks plunge. Worries about coronavirus. So let's get into it. John, I know you're watching, so I'll see you in a couple of minutes, okay? All right. So let's take a look at what happened. The Dow down 1,800 points, closed just near the low of the day. The best thing I can say about today's trading session, was that at 4 o'clock, it actually ended. What we saw today was a revisit of previous substantial down days. What we saw today is this. The economy was starting to reopen. It's still reopening, by the way. It didn't stop. None of the states slammed shut their reopenings. I saw a few states maybe delaying some counties or some phases or parts of phases, but that's very few and far apart. As states reopen, and it appears that they would go smoother than expected, stocks ran up in anticipation of the economy coming back fairly quickly. So you saw deep cyclical stocks like airlines, cruise lines, industrial stocks. You saw hotel, casino, travel, and leisure type stocks. You saw those stocks have major runs, which helped bring up the Dow and the S&P 500 up about 45% off their March 23rd low. You saw the NASDAQ go above 50% off its low, and the NASDAQ, in fact, yesterday hit a new all-time high. But as it is, resurfacing, or I should say a spike in cases in about 24 states, in particular Texas and Arizona, are all of a sudden putting the kibosh on the big upside that we've had in the market. So we've been talking a lot about how could stocks go above, run ahead and do so well when the economy is so bad. Finally, we had some economic news that helped justify the stock market rally. Last Friday's jobs figures came out, 2.5 million jobs created. It was the clear justification that investors needed. But now with the coronavirus spreading, and really surging, and I'm talking about hospitalizations, what you have now is a situation where it's not a matter of states closing. In fact, Treasury Secretary Mnuchin was on CNBC today, and he said we cannot have another shutdown of the economy. This is more a matter of people in other parts of the United States outside of New York, New Jersey, California, realizing how bad this coronavirus is, COVID-19, how catchy it is, and people becoming afraid to go out. And if people are afraid to go out, they're afraid to go out to dinner, they're afraid to fly, they're afraid to travel, etc. All of a sudden, we're worrying about that again, and it keeps the economy stuck. It keeps the economy in a deep recession. And now we have to worry over the next month or so, do the jobs numbers keep improving, or did we just stop dead in the tracks with the labor market improvement, and now the market was too high? That's what we're going to take a look at. So, I like to do a share screen. A couple of quick things. If you're new to the show, if you haven't been watching for a while, and my clients who are watching know this, I've avoided a lot of these kinds of stocks. I've avoided the airlines, cruise lines. My advice has consistently been the same. Don't just try to get into the coronavirus stocks like consumer staples and just own, Zoom and Moderna, and don't just own airlines and cruise lines. You need a diversified package, a diversified portfolio, in my opinion. Diversification, by the way, is a strategy that we use to mitigate risk, but it doesn't necessarily prevent your portfolio from going down in a generally down market, as I'm sure you've noticed. The Dow down 1,800 points. That is a whopper of a day. S&P down almost 6%. NASDAQ down almost over 5%. Russell 2000 small cap got pummeled today. And let's just take a look at the VIX. I think I have this a little too big here. Take a look at the VIX. The VIX was up pretty substantially today. The VIX is up 13 points, almost 50% jump in the VIX. That, my friends, is a massive move higher. We've been talking about on the show how the VIX has remained somewhat elevated the entire time while the market was rallying. Before we got into the COVID, the coronavirus spread of the virus, what happened was that the VIX is around 12 to 14. It went to the mid 80s at the peak, and it's come all the way down to the mid 20s. And now it's back up to 40. I mean, that's a massive move in one day. This goes to show you the aggressiveness of professional money managers to hedge their bets. Moving on, Texas reports a third straight day. This is from yesterday of record coronavirus hospitalizations. You could see a chart right here, record hospitalizations. Now, it's only, I say only, we're talking about lives here. But for the amount of people who live in Texas, 2,000 is not a particularly large number. But if people don't social distance and they're not wearing their masks, and the same thing is happening in Las Vegas and casinos, you don't have to wear a mask. And it's like that in a lot of parts of the country. This is a very catchy virus, and it's understood. It's known. Masks help prevent the spread. However, the real worry is that because you're seeing a spike in cases now, part of it's from testing. So as we test more people, it makes sense that we're going to have more cases of COVID-19, but it's the hospitalization rate that you really have to pay attention to. So that's starting to go up. And then you had all the protests and riots. They're not the same thing, okay, around the country. People in close proximity not wearing masks. The worry is that we're going to have a major resurgence of COVID-19 and possibly leading up to a major rebound in the fall. So the uncertainty is just, it's so thick you could cut it with a knife. And once you have this kind of uncertainty, there was just no way stocks could hold up. They've been ripe for a drop, for profit taking. And then you take a look at some of the top stocks on Robinhood. Ford, low price. GE, low price. AAL, American Airlines. Delta's here. Disney's I like. Carnival Cruise, GoPro, Aurora Cannabis, excuse me. So Microsoft, Apple, and Disney are the only really what I would consider high quality companies in the list. The rest of them are troubled or low price or very speculative stocks. Listen, I'm not knocking Robinhood customers. To me, this is probably your gambling money, your fun money, your learning how to trade money, and that's all fine. because you have to learn somehow, and the best way is to learn by doing. So just letting you know where money came from, where it's going. All right, you take a look at some of the market movers today, the same stocks that you saw galloping up. By the way, if you have questions, hit me up in the comments. Words of wisdom, words of encouragement are always welcome too. So if you're out there, whether if you're in LinkedIn or Facebook or YouTube, I would love to hear from you. Okay, you see, these are the winners of the day. So there's only in the S&P 500. You know what this means? Okay, Kroger was up 0.399%. That means that there was only one stock in the S&P 500 that was up. So that means about 404 stocks were down. I know it's, you think, so that means about, okay, there's about 504 or 505 stocks in the S&P 500. So let's say 503 were down, one was up. And I know they call it a 500 index, but some stocks have more than one class of shares. Okay, so but let's look at the losers. Norwegian Cruise down 16%, Boeing down 16%, Occidental, United Airlines, ONEOK Oil Company, okay, American Air, Halliburton, Energy, Carnival Cruise, Royal Caribbean, Alaska Air. So you can see here that the stocks that let us up for a month, you know what? As fast as they went up, they are going down even faster. Just really breathtaking, the kind of trading action that we're seeing. We're going to take a look at some of the Corona stocks. Clorox is still down, even though it's a Corona stock. Activision, Peloton, Domino's Pizza, Campbell's Soup. Campbell's Soup is one of those pantry stocks. Zoom is up a little bit, and that's been on quite a tear to begin with. But nothing really worked out great today. Just today was more of a relative performance day, meaning some sectors were down less than others. But as you're going to see here, as I'm going to show you, everything was down. So here's the FANG stocks: Facebook, Apple, Amazon, Netflix, Google, Microsoft. These are the biggest companies. They're all down. They're all down pretty substantially. And when these stocks are down this much all at the same time, there's really no way for the rest of the stock market to fight this. But they help pull the market down. They're the biggest market cap companies, so that makes a lot of sense. And the worst, I hope I did not lose that. Okay, I have that. All right, so let me stop sharing the screen here. All right, the worst performing sectors of the day: financials, industrials, energy, materials are pretty bad too. So these are the cyclical stocks. So that takes the V-shaped recovery and throws it in the garbage for today. It's, even though the Dow is down 1,800 points, it's off about 2,500 points the last couple of days. So this is a pretty big takedown. So having said all that, a couple of noteworthy names: the financials, JP Morgan down 8%, Wells Fargo down almost 10%, and the leader of the pack, Citigroup, down a whopping 13%. And some of the other popular trading stocks in Robinhood are bankrupt companies like Hertz and Luckin Coffee are some of the most popular trading stocks. Chesapeake, JCPenney. Folks, when a company goes bankrupt, generally speaking, the stock is doomed to go to zero. So when people trade these stocks like they're bargains or something, just recognize you're playing with a hot potato or the greater fool theory, whichever one you like to use better. And that's what they are. I don't knock people who want to trade, try to make a buck, as long as you know it's a hot potato and you've got to turn it over quickly to someone else. And the other person you turn it over to, it's their job to do the same thing. Now, before I bring in John, there's a couple of people out here. I want to take some questions and see the comments out there. Okay. Hey there, Alex. Good to see you. Good afternoon, Mitchell. Hey, man. Good afternoon to you, buddy. Really great to see you. Thank you for joining me, as always. Filippo and I are good friends, so we talk a lot about all this stuff offline as well. I think the pullback was expected, ran up too much too fast, but I still think the worst is behind us. COVID, regardless of a second wave narrative, the curve has been bent, and people are more educated using masks and distancing. And distant stocks take the stairs up and the elevator down. Just by the dip, go long, and you are so bullish. Phil, you're out there. What's your forecast for tomorrow? By the way, happy birthday. Thank you so much, Phil. Yes, folks, if you don't know, today is my birthday. Thank you so much, Phil. Really appreciate that. My forecast for tomorrow, I think we get really tough to forecast tomorrow. It's less than 24 hours away, but I think we see, either a swoosh down, and then I think we'll probably see some downside. And then toward the end of the day, we start to see buyers come in and say, you know what, this is oversold. That's what I think right now, subject to change. Okay, Tut is out there. John to Tunge. Hey, Mitch. Okay, so Dow Index dropped in March to a low of 19,000, closed today at 25,000. Even if they're dropping 1,800 points, 6%, do you see this as another potential investing opportunity, as was the March low, or should we wait? John, that is the best question of the day. Thank you very much. Oh, and oh yeah, happy birthday. Yes, thank you very much, man. You know, John, you and I have known each other since kindergarten. Phil says, happy birthday from Alex. Happy birthday to me. Thank you. Thank you. Okay. So getting back to your question, John, I don't think we're retesting the March 23rd low. We're giving back a substantial portion of what we've gained that was too quick, too soon. I still think fund managers are behind benchmarks, and a lot of fund managers who bought and chased stocks are kicking themselves now. If they have more cash, they'll probably put it to use when stocks come down a little bit lower. So I don't think we're at the end. I think this is just an interruption in what has otherwise become a Goldilocks story with the reopening. We might not get more spreading of coronavirus. I have to say might. I can't make any promises about that. But I think you stick to your guns, you stick to your asset allocation. We've been talking, I've been talking to everybody about rebalancing, which most of my clients, if you're watching, I rebalanced a lot of accounts on Monday, okay? Especially my ETF only accounts. And not much else to add to it. So I want to bring in my good friend, John. John, are you ready? I can see you, man. You ready? I'm going to put on my headset so I can make sure I can hear him. All right, John, give me a thumbs up if you're ready. I could see you. You're just not in the studio yet. Here we go. How are you, my friend?
Good afternoon, Mitch. Thanks for having me.
Yo, so good to see you. I like the beard, by the way.
I've had more looks during this coronavirus. I had a full head of hair, full beard, part beard.
You actually shaved your head for us, right? Just for us.
Yeah.
So what happened? You were giving yourself one of your, like a self haircut like me, but you messed up a little bit. You try to fix it. And by the time you try to fix it 10 times, you realize it's just got to come off now.
Something like that. Or I just lost a lot more during this nightmare.
I think we all did. So just make sure, I want to make sure I have the right information here. You're the owner of a pretty significant business on Long Island. You've been feeding us all. You were my guest, I would say, about a month and a half ago, about how businesses pivot during the time of coronavirus. You turn your business into all delivery and a farmer's market. And you're just getting back on your feet. You were telling me, hey, I see a little bit of a pickup, but nothing overly crazy. And you're part of the Goldman Sachs 10,000 small businesses. Right. Okay. You got the shirt.
We are now the voices. We are the voices.
So I want to hear a little bit about that. And then you spoke with a bunch of politicians. I feel bad for you.
Yeah. Okay. So, it's actually kind of good to get it out and start some dialogue. And I think that was the most important conversation that we had. I spoke with 4 different elected officials today, and it was kind of universal that communication is probably going to be the best offering of advice throughout this, whether it be within your own organization to communicate to your coworkers, your employees, your supervisors, whatever the case may be. Communicate to your family. Communicate as much as you can. I think the consensus was there's no such thing as over communicating during this. So
I like that. I like that. Over, no way you can not possible to over communicate. Tell me a little bit about the Goldman Sachs 10,000 voices.
So Goldman Sachs Foundation had $500 million that they put towards educating 10,000 small businesses over the course of a few years. So far, they've educated and graduated 9,773, I believe is the exact count of how many graduates of the program. So we're nearing the 10,000 mark. 10,000 small businesses marched on Capitol Hill over the last 2 days virtually. And the foundation, along with the partners in Washington, arranged for us to meet with our electeds. So, for example, here on Long Island, I met with Lee Zeldin's office representing the Smithtown area. Also very, very helpful was Peter King's office, which is over on the South Shore, Nassau County, but extremely receptive to the needs of, my needs in my area.
Peter King, he has a pretty good reputation for being receptive to local constituents.
And that's the thing. You had made a comment about, you feel for me for having to deal with politicians today, but the truth is, they're in office, they are our representatives, and they can make a difference for us. So the 10,000 small businesses, which is the trademark of Goldman Sachs to educate the small businesses, has launched this 10,000 voices, 10,000 small businesses voices. And we are communicating directly with the politicians, the decision makers, as they're coordinating different things. For example, we had a good conversation on the CARES Act, the PPP loan. I, for one, got really the short end of the stick, and I spoke about my dilemma with that. But I shared the story. I'm sure it echoed amongst many small businesses.
Tell me the story. I think the story was you got the money, but you weren't ready to spend it, or
so that's exactly,
you needed more time, because business just doesn't automatically pick up in 8 weeks for everybody.
So they put together the program, and I'm really grateful for them. I thank them for quickly putting it together. Fast moving in Washington is not something we see often, but they did do that. But when you're going to rush something like that, there's going to be errors. So I forgive them for making mistakes, but I ended up getting the short end of the stick. And what I mean by that is they put the money in to my account on April 30th here on Long Island. And on April 30th, we were still shut down. So my chef working for me at the time, this was absolutely devastating. Now he's hearing from all his coworkers who are at home earning $600 more on unemployment, and he's working his tail off, and he truly was.
They're getting state benefits plus $600 per week.
Yeah, so he was feeling disrespected, and he walked out and said, "I'll see you when you can be a little bit more fair, similar to my other coworkers." So I really had to make a decision. I brought everybody back, even though I had no customers. The government said they were going to reimburse me for these expenses, these payroll expenses. So I said, okay. So I brought everybody back with no business. And this was, again, back in April, beginning of May, actually the whole month of May. We're now in June. I still have no customers. It's wasted money. I spent it. I mean, it was good team building for my teams and everything. We had a lot of things to talk about. It's a whole new company, the Sexy Salad, these days. So there's a lot of training we had to do. But essentially, it was a waste of money. So what I was asking them was another round of additional funding, but forgiveness. I don't want to be slapped with a mountain of debt at this point in my career when it's really no need. It was the only reason I'm in such debt is because of the pickle that they put us in by rushing it. So they went from, you're right, 8 weeks. They said, spend the money in 8 weeks or you lose it.
24 weeks, right?
24 weeks, which is a lot. But I already spent the money.
Yeah, it's already gone.
$8 short. So that's what we're asking Washington for right now. And again, they're there. They gave us the day to listen to us. What are our needs? And I'll be honest with you, it was quite emotional sharing my story. It was an incredibly emotional journey.
Tell me about that. You were mentioning you wear your heart on your sleeve. So I hope it's okay to mention. You were mentioning a few things to me before. Wherever you are, you learn how to.
I did. So back on the very first Friday night when I decided or thought that I was going to be closed down till further notice, I decided to take it out on the treadmill, and I learned that you can actually cry and sweat at the same time. Since then, I learned that you can cry in a lot of spots. You can cry in your car, you can cry while you're watching the ocean, which normally gives you a lot of joy, and certainly in any number of places. It was a horrible time for small businesses across America. And I think our elected officials needed to know that. So we had the opportunity to speak directly to Chuck Schumer's office. Kirsten Gillibrand got on the line with us, a Zoom call, and she seemed concerned and interested and willing to go to bat for us. I mean, I certainly hope so. She's our voice in Washington. So Lee Zeldin's office, of course, Lee Zeldin is very active in the small business community and has been for some time, as well. So I think between the 4 local meetings compounded by the meetings nationally. This was in all 50 states, including Puerto Rico, Hawaii. So we got a lot done today and yesterday on Capitol Hill.
So is there any like one particular theme that you and your fellow small business owners are I'm a small business owner too, but I was not participating in today's festivities, but I should call it festivities in today's meetings. But what is the overarching thing that you guys are asking for?
But so I didn't really see it because it wasn't in my organization, which was great to have this dialogue because you get to hear from the different points of view and what's important to other people. Childcare came up more times than anything else today. Childcare. So without schools being, any hard evidence on what we're doing with schools, what are all the parents going to be doing with their children? So that's something that our elected officials are going to have to discuss in chambers and come up with a bill that's going to help protect anybody that's got to get back to work and needs to do something with their children.
Sure. Well, I have school-age children, so definitely we are always concerned about how the school year is going to look. Come September, it's not that far away. And, we're starting to hear contingency plans and pieces of this plan and pieces of that plan. But when you don't have a full picture, you start to fill in the blanks on your own. And usually when you fill in blanks, they're not always filled in with good things.
Yeah, Mitch. I think the common theme today, the challenges are just going to be many. We all have our own, and I apologize. I kind of lost my train. I was gonna share something. I thought
it's been a long day. It's been a long day for you.
It has been, but we don't know what the future is going to be, and I'm going to encourage dialogue all across the board, whether it be our elected officials, locally, statewide, nationally. Their phones are open, their emails are open. They want to hear from us. They don't know what's going on unless we expose. So what I wanted to share was the small business community, large business community. Community probably is the key word. We are an ecosystem. So the challenge is being, we spoke about daycare. Without daycare, mom's at home. Mom's at home. She's not coming into my restaurant. She's not coming into my restaurant. My employees don't have work. So it's just a vicious cycle. So I think all things have to be fixed. We have to dot every I, cross every T, because if we miss one little link, it can blow the whole system.
A chain is only as strong as its weakest link.
And that's what it comes down to, Mitch. Sure.
Yeah. All right, John, I want to thank you for joining me. I really appreciate you always sharing your thoughts. And I'm sorry we couldn't talk longer today, but we will talk again. You are a good friend to everyone, certainly to me, and I'll see you soon. Okay.
Audience, success throughout. We'll see this right to the end. We've fought this far. We're not going to give up. We're resilient. That was another common theme. Entrepreneurs, we are absolutely resilient, and it takes a lot to keep us down. You'll knock us down, but we're going to get up again. I'll talk to you.
Right. All right. Bye.
Good night.
Good night. Okay, so there you have it, folks. That was my friend John Robertson. He's pretty well known in the business community because he networks a lot. A big part of his business is corporate catering and bringing food into office buildings and big events, things like that. So it's just so he has a very good take on the state of small business. So let's get back to the market one more time. I thank you for watching Be the Boss of Your Money. Thanks for sticking with me. This is a tough day in the stock market today. I think we've got some more downside over the near term, and then buyers start to come in and say, you know what, things have gotten a little bit too cheap. We're not going back to the way things were when the global and the US economy were completely shut down. So I don't think we go back there. But the narrative of an easy reopening, which we've been enjoying for the last few weeks, just proved unrealistic. It's the one thing that could knock stocks on on their keister, and it's doing it now. So I say, stay the course. Don't give up. We, in my opinion, are closer to the end than the beginning. We've got some drugs coming out, possibly. We've got over 100 companies working on vaccines. People, as my friend Filippo mentioned, people are smarter about it. People are social distancing a lot more than they were. Not everybody. No, we're all this together. So we all have to do our small part. So hang in there. And I expect better things for stocks, but I can't say I expect them first thing tomorrow morning. All right. I hope that was helpful. If you have any questions that you can think of in the in the replay, let me know and I'll check back. Okay. I'll speak to you soon. Thank you.